27th, 2023. Great to be with you. And as you can see, I'm not home right now. I am actually in an airport in Washington, D.C. I'm in transit to get back home. The last couple of days I was in Louisville watching my San Diego State Aztecs make it to the Final Four. It was a really very exciting weekend, and I'm exhausted, as you could probably understand. But not too exhausted to pass on the daily bites today. So I'm looking at markets right now, and we can see the markets are up pretty sharply today. Not quite 1%, but the Dow Industrial is up nicely, about 200 points here. This is kind of a follow through from Friday's big reversal rally. We saw a huge drop in the futures at the start of the day, and that was the low of the session on, or just about the low of the session on Friday, and we rallied up to close at the highs of the day. That was an important day for a big reversal to happen. The S&P 500 and the NASDAQ and the Dow Industrial all finished strongly, well more than 1% on the week. And that as we enter into the last 5 trading days in March, we often see what's known as window dressing. We'll see that showing up later on in the week, probably on Wednesday and Thursday. What is window dressing? And simply put, a lot of big investors, hedge funds, and so forth will work to try and get more stocks in their portfolio to show that they're investing their money and not sitting on their cash. And I want to have that printed at the end of the month, at the end of the quarter, and that is March 31st. That's Friday. And don't forget, Friday's going to be a big expiration options day too. So there's a lot of options that are expiring for the end of the month and the end of the quarter. They have these quarterly options that expire at the end of March, end of June, end of September, and end of December. And a lot of big institutions use these vehicles to hedge their positions as well too. So we'll see a lot of those expirations hit on Friday. As far as news is concerned, I guess apparently Silicon Valley Bank assets are being bought by First Citizens Bank for a nice discount. That may be considered a little bit of a breather for some of these regional banks that have been coming under pressure quite significantly over the past couple of weeks since Silicon Valley Bank noted their problems, and then Signature Bank as well too. But you know what, we're still, I don't think we're out of the woods here yet. I know we did get a nice close in the futures last week above 4,000, and we're ticking above there right now. The S&P 500 has been having trouble staying above 4,000 for the past couple of weeks, and again, you know what, we'll let the market prove it to us and about what they're gonna see going forward here. Of course, earnings season is going to be starting up in about 2.5-3 weeks, with the banks reporting their numbers probably the second week in April. But like I said, just pay attention to what the trends are doing, and pay attention to what the market is telling you, what the message of the market is from one day to the next. We really can't make a good commitment for several days in a row or weeks in a row with this market, with the jagged moves that are being made, the volatility in the markets and so forth. We're just going to get chopped around. So, take some profits when you have them. Keep some puts on. Again, we're still in a bear market, and that the chart bears that out right now. And make sure you keep lots of cash on the side as well too. So we're just going to keep doing the same things that we're doing right now until the environment changes. And when it does, we'll have plenty of time to make an adjustment to our trading styles as well too. All right. So signing off from Reagan National Airport in Washington, D.C. right now. I'll be back on Thursday morning with our regular daily bites from the compound, from the Lang Baker compound in Boston. And have a great trading day, and I'll see you guys all in the chat room later on today. Leave when I get home, and then on Daily Bites on Thursday. Don't forget to read the Market Blast that I put out every single day. Put one out this morning, summarizing what's happening today and going on to the rest of the week. Thanks, everyone. Take care. Bye.